All right, welcome back to the deep dive. Today, we're going to crack open Varun Beverages. I'm sure you guys have seen them around, maybe even grabbed one of their drinks.
Right, they're everywhere these days.
But how much do we really know about them? That's what we're here for, right?
Exactly. Let's get into it.
So we've got their Q3 2024 results presentation, hot off the presses from October 22nd.
Oh, fresh numbers, love it.
And to help us sift through it all, I've got our expert right here. Welcome to the deep dive.
Happy to be here. You know, financial statements, they can be a bit of a maze sometimes. I'm here to kind of clear the path, make sure we're all following along.
Okay, so first things first, Varun Beverages, not exactly a small fish in the pond, second largest PepsiCo franchisee globally.
Huge. And that's point number one, right? The sheer scale. We're not just talking about some beverage company. This is a global player, potentially reaching like 1 in 5 people worldwide.
Whoa, that's a lot of drinks.
Right. And it really speaks to this partnership model. Varun Beverages, they've got that local knowledge down pat, building the networks. Meanwhile, you've got PepsiCo bringing that brand power, that global recognition.
So it's a win-win.
Exactly.
Yeah.
Mutually beneficial. Everyone comes out on top. Now, I know you're thinking, lots of sugary drinks. Right.
I mean, it's Pepsi.
Right. But that's where things get really interesting. Varun Beverages, they're not just about the sugar rush. They've actually been making some really smart moves, diversifying that portfolio of theirs.
Oh, yeah. Tell me more.
Okay, so get this. Nearly half of their consolidated sales, low or no sugar drinks. They're not just keeping up with the times. They're like ahead of the curve.
Wow, that's impressive, especially with their image. You don't usually associate healthy with, well, soda.
Exactly. It
Yeah.
shows you they're paying attention,
Right.
right? And it's not just the sugar. They're also branching out non-carbonated drinks. Huge growth there, 24% in India just this year. That's massive.
Makes sense, especially with those crazy monsoon rains in India this quarter. Even their chairman said it was a struggle to sell drinks with all that rain.
Yeah, talk about a buzzkill.
So how'd they do? I mean, given the weather.
Despite the rain, they still pulled off a 21.9% sales volume increase. Not too shabby.
So even with Mother Nature working against them.
They're still coming out on top. Of course, we got to keep in mind, a good chunk of that growth is from acquisitions. But even organically, things are looking up, especially internationally. Almost 8% growth.
They're playing the long game, that's for sure. And speaking of expansion, what about this new facility in the Democratic Republic of Congo? They're already at capacity.
Yeah. And they're doubling down. New facility next year. They're moving fast.
Sounds expensive.
Well, they did just get approved for some serious funding. RS7 500 crore, almost $1 billion USD, through a QIP.
QIP.
Right, basically a way for lifted companies to raise capital quickly, efficiently. And the fact they're doing it shows they're confident, they're ready to invest big time.
So expansion, new markets, new products. Is it all about profit, though? I mean, what about sustainability?
Now, that's a great question. And honestly, something I was really surprised to see in their report. They're making some bold promises, let me tell you that.
Okay, so they're not just about the bottom line.
Seems like there's more to them than meets the eye.
So let's talk sustainability. Impressive goals are one thing, but what are they actually doing?
They're not messing around. Let's start with water, right? Huge issue. They're actively managing like over 150 water bodies, ponds, dams, the whole 9 yards.
To what end? I mean, what's the goal there?
Replenishing groundwater, of course. Remember that goal, being water positive by 2025. It's not just talk, it's measurable, which is key.
Right, holds them accountable.
Exactly. And it doesn't stop there. Carbon footprint, they're all over it. Increasing renewable energy, solar, wind, aiming for a 35% emissions reduction per liter by 2025.
Okay, so they're getting greener, but what about the elephant in the room, all that plastic?
Major issue, I agree. But they're on it. 100% recycled plastic by 2025, that's the goal. They're putting their money where their mouth is, investing in the infrastructure, even partnering with like a global leader in recycled material.
So it's not just greenwashing, there's a real commitment there.
Oh, absolutely. And look, it's not all altruism, right? There's a business case here, too.
Right, gotta keep the lights on.
Exactly. Reduce your impact, you reduce costs, plus the brand image, right? Attracting those eco-conscious consumers.
It's smart business, really.
That's
Okay,
right.
so they're growing, they're going green, but how are the financials actually looking?
Let's get into the nitty-gritty. Sales volume, first up. 267.5 million cases sold this quarter.
That's a lot of cases.
It is. But keep in mind, 21.9% increase year over year. Some of that's from those acquisitions we talked about.
Right, Bevco and the DRC expansion.
Exactly. But even organically, internationally, almost 8% growth.
Not bad at all.
Not bad at all. Even in India, despite the monsoons, 5.7% growth,
So they're weathering the storm, literally. Okay, revenue.
up 24.1% year over year, hitting almost ours. 48,047 million this quarter.
Healthy growth. But is it all soda or?
That's the interesting part. So yeah, carbonated soft drinks, still the bread and butter, but those non-carbonated drinks, juices, dairies, sports drinks, massive growth there, almost 24% in India alone.
So they're reading the market, adapting.
Exactly. And that diversification, it's paying off. Okay, now let's talk profitability because revenue's great, but margins, that's where the real story is.
Let's hear it.
Gross margins up 22 basis points, hitting 55.5% this quarter. And remember how we talked about those low and no sugar drinks?
Yeah, they're really pushing this.
Almost half their total sales volume now. It's not just a trend, it's their business model now.
And it's working for them.
It is. Okay, EBITDA, you ready for this? Up 30.5%.
Oh.
Right. Ours is 11,511.2 million. And the margin, even better, 117 basis point improvement. Sitting pretty at 24%.
So they're getting more efficient, too. That's got to make investors happy.
Music to their ears.
Okay, bottom line time. Net profit. Up 22.3%, reaching ours. 6,288.3 million this quarter. Solid growth. But I did notice depreciation costs. They jumped up a bit, didn't they? What's the deal with that?
Ah, good catch. Yeah, up around 50%. But remember, all those investments, new facilities, the PepsiCo acquisition, depreciation's just how we account for that, spreading the cost over time.
So not a red flag per se.
Exactly. Just part of the growth game. Now, finance costs, those did go up, almost 90%. That's something to keep an eye on.
Yeah, why such a big jump?
Mostly tied to those expansion efforts. Again, new facilities, acquisitions, all that costs money to finance.
So short-term pain, long-term gain.
Potentially. It all comes down to their debt management. Can they keep it under control while still growing? That's the balancing act.
High stakes. So we've seen the snapshot, but what about the bigger picture? How does all this compare to their past performance?
Let's rewind, shall we? Let's go back to 2018 pre-acquisitions and see what we've got.
All right, take us back.
Okay, so between 2018 and 2023, revenue CAGR of 25.7%. That's over 25% growth every year on average.
Wow, that's impressive. Consistent growth like that's the dream.
Right, and it's not a fluke. EBITDA, same period, 29.1% CAGR. They're not just growing, they're getting better at it.
Turning fizz into profit, huh?
Something like that. Okay, ready for some more impressive numbers?
Hit me.
2018 to now, consolidated sales volume from 51 million cases to 163 million cases.
More than tripled.
More than triple. And the profitability is keeping pace. EBIT margins from 19.7% 2018 to 25.3% in the first 9 months of this year.
So they're consistently improving. That's huge.
Absolutely. Okay, last one, net worth. 2018, ours 20 billion. First half of 2024, ours 87 billion.
Okay, so triple-digit growth seems to be their thing. But what about those profit margins after all the dust settles, not just EBITDA?
Good point. They're not as flashy as some of those other numbers, but they're moving in the right direction. 2018, 5.9% profit margin. Now, almost 15%.
So still a healthy increase, even with all the expansion and changes.
Exactly. They're finding ways to make it work.
So they're doing it, huh? Impressive growth, solid financials, even walking the walk on sustainability.
It's a compelling story, no doubt.
Yeah.
Of course, there are always questions.
Right. Can they keep this up? All this growth, these acquisitions. It's a lot to manage.
Exactly. And those sustainability goals, are those realistic with all this expansion?
So many factors at play. It's a real balancing act.
It is. And that's what makes this so fascinating, right? For Varun Beverages, they're at a crossroads,
Yeah,
proving
exactly.
themselves, but what's next?
The next chapter's unwritten. Can they keep this momentum? Can they stay profitable while going green, while expanding into new markets? So much to think about.
It's a great case study. Shows you even something as simple as, a bottle of soda, there's a whole world behind it.
Global markets, consumer trends, sustainability, it's all connected.
All connected.
Well, I don't know about you, but this deep dive has me craving a refreshing drink.
Me too.
To our listeners, if you're thirsty for more, check out Varun Beverages' full report. It's on their website. Lots to dig into there.
Definitely worth a read.
And remember, this is just a snapshot. Things are always changing, so stay tuned as we keep exploring the companies, the trends shaping what we drink. Until next time.